Want to turn back to the banks, obviously. Wolf Research downgrading shares of Comerica to peer perform, saying this: at a time when the regulatory environment is likely to become more stringent following several recent regional bank failures, we believe Comerica is likely to operate in capital accretion mode and should constrain Comerica's absolute upside potential over the coming quarters. And this is the problem. What's the profit outlook for some of these names? CFRA's Alexander Yokum weighing in on the turmoil, saying this: the recent regional bank failures will have a negative impact on future earnings for the banking industry. We estimate the cost of replenishing the deposit insurance fund could translate to a 14% hit to the banking industry's earnings over just 1 year. Alex, I'm pleased to say, joins us right now. Alexander, great to have you with us on the show. I've been meaning to catch up with you for a while. You've made this really simple to understand in recent comments, and if you'll allow me, I want to share it with our audience. You said this: more deposit outflows lead to less lending, more expensive funding costs, and thus less profitability. And you went on to say the fact that the news is talking about banks so much is leading more people to realise their bank deposits are not paying much, which leads me to ask this question. Alex, this regional banking model, is this a viable business with interest rates of 5%?
Yeah, it's very difficult, especially the bank you mentioned, Comerica. That's a bank that has almost half of their deposits in non-interest-bearing accounts. And like I said, with banks being talked about so much, people don't want 0% on their accounts right now. They're likely to move their deposits. The problem for banks is, their assets aren't necessarily repricing higher, so they can't pay, 3, 4, 5% on their deposits. So it is a very difficult position right now for banks. The good thing is they generally do still have excess deposits despite the outflows. But where the problem is when they have significant outflows, like Comerica, like PacWest, companies like that, that's where the problem really can, get exaggerated.
If they're going to struggle with rates of 5%, is there a solution outside of just cutting interest rates?
Yeah, there isn't necessarily a clear solution there. They can increase the rate they pay on deposits to try to, get as many as possible to stay. But there isn't necessarily a clear solution. And I think that's one of the reasons why banks are trading at such depressed multiples.
What did you think yesterday was? Some people called this some kind of speculative attack, that the shorts just moved from First Republic and piled into the likes of PacWest, piled into Western Alliance. Alexander, what did you think this was?
Yeah, I think there was a little bit of that. So First Republic, over 30% of their shares were shorted. Obviously a successful short. In general, pretty much all regional banks have not recovered very well. So there's been a lot of profitability for shorts. If you look at the worst performing names like Comerica, like PacWest, like Western Alliance, their short interest has tripled. And then, First Republic went down Monday morning, and basically right after that, you started to see the sell-off. So it's almost like the shorts switched to other regional banks. But yesterday, I really think there was just a fear for everything. People were looking at, which banks have high commercial real estate exposure, which banks have high levels of uninsured deposits, which banks are highly concentrated. The 3 banks that went down, including PacWest and then Western Alliance, all 5 of those, they all have over 50% of their deposits in a single state. So when there's fear, if all your clients are in the same place and they're talking to each other, that can kind of spiral, and people might take their deposits out just because they get nervous.
Are you worried this gets worse before it gets better? Do you think more banks fall from here?
So it's definitely difficult to say. Unfortunately, it is a little bit of a self-fulfilling prophecy. So if people had actually listened to Jamie Dimon on Monday, I do think that there probably wouldn't have been any more failures. But if we do see significant sell-offs in bank stocks, I think it could result in more deposit outflows. Interestingly, most of these banks actually said that they saw deposit inflows in April, or at least their deposits were stable. But if the stock is falling 20% and you still have deposits in that bank, and you can get a higher interest rate somewhere else, there's not really any downside to take out your deposits. So it does sort of make sense, if you get nervous.
Alex, if it's not just about return of capital, it's also about return on capital. Does the FDIC coming out and scrapping the upper limit, does that change anything?
I could say it might, because, the 3 banks that went down, they all did have very high levels of uninsured deposits. The average in the banking industry is about 50%. and Silicon Valley Bank had 95% uninsured, Signature Bank 90%, and First Republic almost 70%. So if they did increase that number, I actually do think it could potentially help out.